our presentation on home equity loans. What is a home equity loan? A home equity loan is a type of loan in which the borrower uses the equity in their home as collateral. What are some of the common uses for a home equity loan? Some people like to remodel their home. They could possibly purchase a second home, consolidate high-interest credit cards, use the money for college education for their children. There's any number of purposes that a home equity loan can be used for. How do I know how much equity is in my home? The equity in your home is the portion you actually own versus the amount that you owe to a lender. If your home is valued at $250,000 and you owe $200,000 on your mortgage, you have about $50,000 equity in your home. So what does the loan to value mean? The loan to value is a ratio of the balance on your home loan compared to what the value of your property is. So if your home is valued at the $250,000 and you owe $200,000 on your mortgage, the loan to value is at 80%. So you may not have any available equity at that time to be able to borrow. However, there are other products out there through the Member Close program where you can borrow up to 100% of the equity in your home. The interest may be higher, but you'll be able to get the money for what your purpose is needed. Why is the loan to value important? Generally speaking, lenders will allow an 80% loan to value ratio, meaning you cannot borrow more than 80% of the value of your home. If your home is valued at $250,000 and you owe $150,000 on your first mortgage, you would typically be able to borrow about $50,000 on the equity in your home. As I mentioned, there are some exceptions to the maximum loan to value, so you would have to check with your lender. Types of equity loans. There are generally two types of equity loans. There's what we call a fixed rate equity loan and then an open-end line of credit. The fixed rate equity loan is usually for a specific term and you borrow a specific amount of money over that term. Most of the time, those interest rates are fixed. The equity line of credit, there are two types of equity lines of credit. There's an interest-only program, and then there is a program where you would make principal and interest payments. Both still work the same way, where you can re-borrow the amount that you have available on your line. Most of the time, those interest rates are adjustable on the equity lines of credit. Some of them may have an annual fee, or they could have an early termination fee as well. Principal and interest payments. Once the line is established, you can borrow as much as you need at any time that you need it by writing a check or using a credit card that is connected with the account. For a home equity line of credit where there are principal and interest payments, you immediately begin making payments after the first draw, and there is no specific draw or repayment period. On some types of interest-only lines of credit, there is a specific draw period. It's normally about 10 years, and then it usually goes into a 15-year repayment period. And monthly payments are based on the amount that you have outstanding, not your total line. What documentation is typically required to apply for a home equity loan? This differs among lenders, but the common documents that are needed is a current pay stub, your last couple of years of W-2s. If you're self-employed, we may need your last 2 years' tax returns, the full tax returns, a homeowner's policy, and a recent real estate tax bill. And this just shows that your taxes are current and your home is insured. Are there costs involved with obtaining an equity loan? Costs will differ between lenders. Some lenders will not charge for a title or an appraisal, and there are no closing costs. All lenders are required to provide a loan estimate which outlines the fees, and that you would get upon your initiation of asking questions about an equity loan. Is the interest tax deductible? So one of the advantages of a home equity loan is that the interest may be tax deductible. the same as you have the deductibility on a first mortgage loan. However, you would need to check with a tax advisor to determine your eligibility. And how do you find the best home equity loan? Well, you need to do your homework, shop around, compare interest rates, closing costs, if there are any appraisal fees or title fees, determine which type of loan best suits your needs, and be prepared. Have the documents ready. Know your credit score when you actually go in and see your lender. And I am very passionate about credit unions, so I would suggest you go see your local credit union. And I would like to thank you for taking the time to listen to this presentation.